Okay, I just want to let my panel know that, especially the governor, that I'm in charge of this panel this afternoon. And there's going to be no preferential treatment. When I say time to stop, we stop. Next week you can call me and say, Joanna, da-da-da-da-da. But today I'm in charge here. Okay, so we're going to start our panel discussion today with the governor. And he's going to tell us a bit about the blockchain and cryptocurrency and what all the exciting things that the ECCB is doing. After him, we'll have Rawdon, who will talk to us about the security concerns and how these are being addressed in the ECCB pilot. He's been working very closely with the ECCB. Mr. Clark Russel is going to tell us about the Curacao experience in developing a national digital currency. And Vanessa, sorry. It's a bad thing that I do. Is going to talk to us about security risks associated with all of these new, exciting, disruptive things that are happening in the industry. So without further ado, I will take you over to our esteemed governor.
So thank you very much, Joanna. I'm on the clock, so I'm going to get started. Good afternoon to everyone. And I'm grateful to CAB for this opportunity to address you. I've enjoyed it today, and I've learned so much. So my task, I want to do three things in the short time that I have. The first is to provide a working definition of virtual currencies and the related issues. Second, to share a little bit about the ECCB Digital Currency Pilot. And third, to talk a little bit about some of the risks that we see as we proceed. But before as I jump in, I want to start with this very interesting quote. Virtual currencies, perhaps most notably Bitcoin, have captured the imagination of some, struck fear among others, and confused the heck out of the rest of us. And I like the quote because I think it's really true. And so, and this is by Thomas Carper, U.S. Senator. So as I begin, let me put up a working definition of virtual currencies. That's our topic. Virtual currencies are digital representation of value. Digital representation of value issued by the developer and denominated in their own unit of account. They can be obtained, stored, accessed, and transacted electronically as long as the transacting parties agree. Critical. Examples include airline miles. Yes, that's a virtual currency. Yes, that is. Cryptocurrencies such as Bitcoin and Ripple and so on. And central bank digital currencies such as the digital Eastern Caribbean dollar. Now, just very briefly, the topic says virtual currency, so I started there. But in central banking and in the more general discussion, we more often talk about digital currencies because digital currencies is the umbrella under which virtual currency falls, like the loyalty programs, cryptocurrency fall, like Bitcoin, and of course, central bank digital currencies like the DXCD. So that umbrella is digital. And I think you know that with virtual, you're talking, it's different from crypto. Crypto, you're talking not regulated, no underlying assets, not legal tender. Example of which is Bitcoin. That's the most famous example. Contrast that, of course, with a central bank digital currency, which is legal tender, backed by the assets, the reserves of the central bank, the bank's balance sheet, and of course is regulated. So just to be clear, because people keep asking me about our cryptocurrency. ECCB is not doing a cryptocurrency. What we're doing is a digital currency. I don't want to get too much in the weeds on that this afternoon, but it's important for us just to recognize the difference about what we're talking about. Because a lot of the cryptocurrencies that are wrong, well, pretty much all of them, no intrinsic value, not regulated, fluctuating in value, and of course, fraught with a lot of difficulty. So I'll leave it at that. As we speak, there are at least 40 central banks now engaged in central bank digital currency pilots of one kind or another. In fact, that number is growing daily. And so I want to talk briefly now about what the ECCB is doing in this area and what are our motivations for this particular move. One, it is that we want to issue a digital EC dollar. Why? As we speak, 80% of all of our payments are cash or checks. That's in value. And in terms of volume, it's about 45% of our transactions. That is way too high in 2019. And there are a lot of issues around the use of cash, the excessive use of cash. And therefore, we've said we want to pursue a strategy that reduces our use of cash by 50% over the next 5 years. And we believe the digital dollar is one important way to move forward on that objective. Second, we readily conclude that the payments are still too slow and too expensive in our parts. You're talking in some cases about 3%, 5% to credit card companies to make these purchases. That is a real concern in our space at this time. And I make the point all the time. People ought to be paying for the services that they want to consume, not paying for the payment of the services. And that's the problem which we have to address in the context of financial inclusion and the other things that we want to do. But then there's also the issue of KYC utilities. As we think about the challenge, the existential threat of the risking on our region, the question is whether and to what extent blockchain, for example, gives us the ability to deliver real-time transaction monitoring for our correspondent banks, such that we are able to address this concern. Now, the pilot addresses the first two. The third one is a bigger assignment that requires international cooperation. But the reason why I mention this is because in the Caribbean, all that we have seen on this issue of correspondent bank relations over the last 5 years, for example, points to the fact that it is also about size. It is not just about AML CFT. It is about size, our small size and our perceived high risk. And therefore, our point is to the extent that we can use these utilities in, for example, a blockchain platform, it potentially addresses the issue of size so that that comes off the table and we can have a more durable and more certainty around our correspondent banking relation going forward. Because the reality is that notwithstanding our best efforts, we continue to face the real prospect of a call from a correspondent bank saying that the relationship has ended, and when asked why, simply saying it's a business decision. You can't run a financial system like that. And we have to be able to provide more resilience in the system, and that's part of the motivation. Now, some people have asked, well, as you do this, are you going to leave anybody behind? And I often say to you, nobody's going to be left behind. But as governor, I am more concerned about our region being left behind. And so multiple channels will be available. And if you look at this slide, it is illustrative, but it simply tells you if we reduce cash by 50% over the next 5 years, this is what we're going to see by 2025. Checks, we hope we will reduce that by 80%. God knows we've got to do something about checks in this region. And then, of course, you see credit card usage increasing, debit card usage increasing, electronic payments going up, and then the digital EC dollar sort of takes up from where the physical cash falls off. That is so those are multiple channels. So everyone is accommodated. And since our previous discussion was about the customer, I see the customer being served in any one of these 5 channels. So put that to rest. Now, let's talk quickly about the risk, because I now have my last 3 minutes. And I have an unforgiving moderator in respect of my time management. I had to get that in, Joanna. So, what are the risks? We see 3, there are several, but I want to mention 3. The first is, obviously, the issue of cybersecurity. There is no question that that is a risk. What I would say is that with or without central bank digital currency, we were always dealing with cybersecurity risk. So it's perhaps enhanced or it's an additional concern, but it was always there. And therefore, the response of central banks and commercial banks, and indeed the financial system, has to be an enterprise risk management approach to this question of cyber risk. You can't leave it and put it on one side. You can't think about it in silos. You have to think about it across the entire organization. and embed it in an enterprise risk management approach. And that is certainly how we are treating with it. Roddy will later on tell you some specifics about some of the provisions that we've made to address cybersecurity. But I will contend that blockchain provides far more opportunity for us to secure the system than is currently available. And so I often, when people talk about AML CFT, because that's the second risk, obviously, financial integrity. Maybe it's the first, actually, and cyber is the second. But the question of AML, anti-money laundering and financing of terrorism. And I make the point all the time that that is a primary concern, and it's a non-negotiable as far as this pilot is concerned. We are going to have very robust standards around AML CFT in this pilot. I'm very confident of that. But I make the point, this pilot is an advance on what we have now, because the excessive use of cash is clearly an opportunity for money laundering. And the point is that one of the motivations for getting the cash level down is to be able to precisely reduce such opportunities, harden the financial system against crime. The third area of concern is the fragmented regulatory framework. If you think about it, technology knows no borders. And this business is really cross-border transactions. And the current arrangement where there are no strong coordinated legal framework presents a real challenge and a real risk. Not just arbitrage, but real risk to the financial system, including potential systemic risk. And our approach to dealing with that is a joined-up approach where the regulators in the ECCU have come together to begin to fashion a joint legal and regulatory framework. And by the way, while the pilot is initially in the 8 countries, well, 4 of the 8 countries in the ECCU, our hope is eventually to extend that beyond the ECCU to the wider Caribbean. So for example, we would expect to be able to do a pilot perhaps with Barbados in due course. That then widens the conversation to CARICOM, because we trade in our region principally in US dollars. So correspondent bank issues aside, I mean, beyond the border, as in the Caribbean border, even within our own spaces, in non-US countries, we are trading in US dollars because there is not a mechanism to facilitate that trade. And one of the challenges of central banks is to figure out whether and to what extent we can come up with a settlement network that allows us to use our existing currencies, perhaps a digital currency, to be able to facilitate digital trade. So those are some of the concerns that we have. There are others like interoperability. We perhaps will pick those up as the panel discussion flows. But in the interest of time, I will conclude by saying that a balanced approach is required. So these are some of the risks. I just mentioned a couple in the interest of time. I picked up 3. The final comment is that a balanced approach is required. Very often when we have these conversations, I hear about opportunities, and people get giddy with those opportunities. And if you go without considering the risks, that will be reckless. But at the same time, I also hear, particularly in regulatory circles, oh, we don't understand this, we can't do anything, we have to wait until we understand. That approach will not work either, because that approach is feckless. We have to lean in as regulators, engage the industry, and that's what pilots like the one we're doing is all about, helping us to discover and better understand what it is we're going to do. There can be no innovation without experimentation, and no progress without innovation. And so we believe that that is an important step as we advance objectives like financial inclusion, payment efficiency, economic growth, competitiveness, and resilience. And I'll stop there for this time.
Okay, thank you very much, Governor. I know you have a lot of questions, and so do I, but we will leave them for the Q&A session. And then we will go to Roddy, who will kind of take us through the security concerns and other things that he wants to share with us. Okay. Thank you, Roddy.
Number 2. Thank you. I'll start first by saying it's a pleasure to be here, and thank you for the invitation. I will talk about the security concerns, but it was suggested that it might be helpful just to talk a little bit about Bitt, the company, first, so you have a bit of a profile on what we do. I will say when I first started this job in October 2017, just before I was announced as the CEO, I was at the company's Central Bank Meets Blockchain conference, and one of the speakers was the governor. And he got up and he spoke very passionately about what he's just presented to you. The passion was such, it was almost like a revivalist Sunday. He got a standing ovation at the conference. And I sat there and I thought to myself, Lord help the person who has to speak after him. And it's been my fate ever since. So what is Bitt? Bitt is a company that specializes in payments using blockchain technology. A little bit about the company background. It's really this emergence of blockchain technology that has given us, actually, we think, the opportunity to create a substantial new company, especially in the Caribbean, and especially in economies where the cash component is very heavy. And typically, we're in a region where the informal economy is identified at around 30% of what recognized GDP is scored at. So in Barbados, for example, that is equal to about 1.5 billion US dollars. Now, cash is expensive. I think this will come out in the questions. So where there's an opportunity to reduce that cost and remove it from the economy, it represents a real opportunity to drive growth. There are only three ways you can drive growth. It's through foreign direct investment, increasing jobs and the hours worked, or through increases in productivity. And this kind of innovation speaks to that, and it represents an opportunity to actually allow our economies to leapfrog ahead. And when I look at this, I think this is really about interoperability. I'll give you one quick example of that. We were invited by the Central Bank of Haiti to go and present to them last month. And Haiti is a place that's benefited from a lot of money being put into the economy to drive, notably, digital wallets. And yet the usage is very low. And one of the reasons it's very low is because everybody has their own solution. None of them are interoperable. Digicel dominate that market with their solution. Unibank is number two, and there's a third bank also. So although all this money has been put in, it hasn't really resulted in the gains that the people who funded it, and this is the Bill and Melinda Gates Foundation, were hoping for. Well, to my mind, the key is that you have to strive for interoperability. And this is one of the things that the pilot in the Eastern Caribbean is looking to do. We're not trying to replace cash. We're really trying to create another way of paying for something such that a transaction that would not have occurred does occur. That might be a remote payment, for example. How is it that I can put this third bullet point down, that we can extract 10 times savings from current processes? Well, we didn't dream this up. This is actually from data we've pulled from pilots that we've done in Barbados with large cash transaction-based companies such as supermarkets and gas stations. And the key here is that blockchain offers a peer-to-peer solution. It disintermediates some transactions, not all of them, and that doesn't mean that banks are going to go out of business. And I'll speak to that a little bit on this next very busy slide. So I know we're strapped for time, but what we're trying to do on this slide is give you an idea of both what we think the ECCB pilot can lead to and the goal of Bitt. We really want to promote a blockchain-enabled digital currency ecosystem. And we start with the central banks at the top, because the central banks, if they do adopt a central bank digital currency, they really legitimize its use all the way down throughout the economy. And it will be promoted almost by default with licensed financial institutions, with merchants, and with consumers. And it represents a way to realize that 10 times value, or amounts approaching that I referred to on the earlier slide. I would point out one thing here. At Bitt, we're interested in recurring revenue. We're here to make money. And one of the areas, when I say I know banks won't go out of business, one of the areas I can see cooperation in, for example, is on government disbursements. So to give you an example, in Barbados, we have a national insurance scheme. It disperses about 1.2 million checks a year. Paper come down to get those checks. They put them in a bank to cash them. All of this requires several steps that you could save a great deal of money on if you were dispersing them with a central bank digital currency. Now, that kind of work really needs a trusted financial institution, which is to say members like those that are sitting here from CAB, and a technology company. There's a natural partnership here. And I think it's one of the reasons that we won this contract to do the pilot in the Eastern Caribbean. This is a way to take technology and apply it to contextual problems that we see here and really solve them and get something out of them. A little bit about Bitt, the company. I'm not going to run through these back to back, but the governor talked about the Caribbean Settlement Network, and there is a Caribbean Settlement Network working group where we are really looking at how you can have a network of nations with a central bank digital currency all trying to embark on digital trade. There are many advantages to this. The forerunner to this system, some of you may know this, the CARICOM multilateral clearing facility in the late 70s and early 80s. I mean, it did actually fall apart, but not because it wasn't a good idea, but because the rules weren't all followed. Now we have an opportunity to retest that using technology in such a way that you don't actually save foreign currency here, but what you do is you get to manage your cash, manage your reserves far more efficiently. That's what that is aiming at. And again, this points back to the pilot, could be the start of several other pilots that can lead into savings and innovation in this region that really push us forward. Okay, this is a small visual representation of what we're trying to do in the pilot. We've got 8 territories. They're separated by over 2,000 square miles of water, I think. You've got people who want to do peer-to-peer transactions, and sometimes there's no easy way to do that. What we noticed when we signed with the ECCB is that we immediately started to get interest from other central banks who wanted to hear from us, like Haiti and a couple of others in West Africa. Now I'll just lead into the security aspects. Now you've got this up here. The solution that we're going to implement comes from Hyperledger. Hyperledger is a foundation. It's got over 200 members, and it's using an open source code. Now, it's funny, it seems counterintuitive to use the word open when you're talking about security, but the key here is that that code is developed by these 200 odd members. I think it's closer to 300. And it's the membership that's really important. When you have a community of, I would say, high-value members driving the production of a code in which they all have skin in the game, it's almost like a pooling of resources. It's many hands make light work. That in itself speaks to better, transparent code, almost real-time constant maintenance. It's very important, and it's in contrast to a proprietary system by a single firm partners. It is superior. In terms of the community, there's a real cross-section of members here. Some of them come from academia, and they're divided into premier members, ordinary members, and associates. Some academic members like Peking University are associates. There are Deloitte, who are in the room. They're also part of the foundation. In the ordinary membership, you've of course got very strong IT representation, but also industry representation from insurance companies, for example. But in the premier list, you've got companies like Hitachi, who Vanessa is going to talk about. You've got Intel, IBM, Accenture, JP Morgan, a whole host of companies who are really putting a lot of their resources into making this right, and for sure they don't want it to go wrong. And this is one of the main reasons we chose this as the solution. Now beyond that, I thought the government made a great point on security. It applies to all solutions, not just blockchain. So for example, if I say that some of the security, hardware security modules that we will be using are air-gapped, all that means is that they no physical connection to the internet. They are actually physically set apart. It's the most secure way you can have your security modules organized short of turning them off, and the only way to transfer data to them is through physical media. There's several other systems that will be put in place, notably at the network level. There's what's called segmentation and segregation, so that in the aggregate, you have a network, but it's really comprised of multiple sub networks. What this means from the point of view of someone coming in and hacking is that any given intrusion into a subnetwork doesn't propagate across the network. It's almost like layered security. I know that, again, this is almost like how do you handle your passwords in your telephone? You have to have sensible protocols in place to manage that. And these are going to be rolled out in the case of the pilot. And finally, there are things like multi-signature arrangements, so that your absolute key processes they're not just in the hands of one person who might go crazy or not show up to work one day. There are sensible, delegated authorities that will be put in place to manage these things in a way that guarantee, especially for the central bank itself, the ECCB, that guarantee that there isn't misuse and that protocols are followed. And I'll stop there for the moment, and I hope I haven't run over time. Thank you.
Very much, Roddy. Okay, now we have Mr. Clark Russell address us on the Curaçao experience in developing a national digital currency.
Help me here with my presentation. Well, good afternoon, thank you, first of all. I'm going to talk a bit about, not an experience, but more the preparation or awareness on a national digital currency for Curaçao. I decided to present some aspects of a study and design considerations we performed for a national digital currency for Curaçao. Yes, thank you. And we did this study in collaboration with the Curaçao National University, the UOC students. But first, I believe it's very important for me to explain a bit the complexities of our banking and monetary environment of the Dutch Caribbean. Although it's generally felt that our Dutch Caribbean banking system carries some level of sophistication, in reality, it does not. Next to still being very much cash-driven society, we still have the same issues of friction that are felt everywhere. We still have very expensive to manage these systems. No economies of scale to get real advancements in technology. Non-existent local e-commerce. And actually the whole system is holding back real innovation. If you look at history, we come as Curaçao, we come from a very or we have a very complex regulatory environment. History shows we have been 6 islands. I mean, many of you know that we were the Netherlands Antilles back in the 80s. Then Aruba stepped out in 86, I guess. They become autonomous within the kingdom, and 5 islands remained the Netherlands Antilles until about 10 years ago. 10 years ago, there was a referendum, and by choice, the 3 smaller islands, Bonaire, Saba, and Statia, decided to become an overseas territory of Netherlands, of Holland. So they become much closer to the Dutch kingdom as a province, you may say. And Curaçao and Sint Maarten remained or changed their constituency to an autonomous one like Aruba did. Now, what that actually put in place was that Aruba, once they stepped out in 86, they chose to have their own currency, their own central bank. So we have the Aruban guilder is being handled on that island. Bonaire, Saba, and Statia, when they decided to go or to become an overseas territory of the Netherlands, you might say, well, maybe they would choose to use the euro as their national currency, but they decided to use the US dollar as the national currency. And then that leaves us, Curaçao and Sint Maarten, with a currency that is named after a country that doesn't exist anymore. So the Netherlands Antilles doesn't exist anymore. Now we have a country Curaçao and the country Sint Maarten within the Dutch kingdom. But we're still using a currency named after the Netherlands Antilles. So we have the Netherlands Antilles guilder that's being used. But to top that, the complexities of regulating these jurisdictions, these monetary jurisdictions, is one thing, but also the banks operating in these jurisdictions are all managed from, are all headquartered in Curaçao. So a main office is in Curaçao, but they handle various currency jurisdictions and they need to report to the central bank in various currency jurisdictions. So this is a nightmare, not only for the banks, but also for the central bank in order to maintain this all. So this is just the context of one of the drivers that I think is important to share with you why we did this study. And for the ones who don't know us, IBIS management has been around for almost 20 years, servicing the Caribbean area. We have over 200 implementations of projects that we've done in the region. Our expertise is helping institutions to become what we call profitably efficient, especially looking at payment processing in the back office, streamlining the back office with platforms and solutions that will embrace straight-through processing in the back office as well as outside. We're also now focusing on blockchain research and development as well as project management and implementation. We operate out of Curaçao. Our island has a small economy, and it's also one of the drivers that I want to highlight. These are a couple of the items, and I'm sure you will recognize these within your jurisdiction too. So the payment infrastructure is dominated by a few commercial banks. So it's very fragmented. It holds back innovation. There's an innovation gap. Limited economies of scale. We're very dependent on specific sectors for our economy. There is financial exclusion and financial illiteracy amongst our people. So I'm sure you will agree that you also see that. One of the things when looking at our financial systems, there's no real-time online payment possibilities. There's a non-existent e-commerce. So there's no way you can do, or there's no development in e-commerce on the island. You are always dependent on how to process payments with an outside processor, which makes it more expensive and more risk, and banks do not tend to bear that risk to develop that type of service. Inefficient to non-transparent payment systems. Attitude also of the dominating commercial banks towards payment innovation. So if I bring something and I'm first, and you have to become a bank company. So the rest of the unbanked don't I would say that benefit from that. And also, there's a major informal economy. People, the unbanked, will do their transactions under the radar, and it's cash-based. Yeah? So that really sets the stage for change. So we decided to reach out to our university and collaborate on a white paper, do some research on what's the best way to do a digital, or to bring a digital currency to our environment. So the reason why we did that, of course, is first of all to expose our internal team to the millennial way of thinking. So bring in a team of young students, expose them to our development team, and every week they come together and we talk about how are we going to do this. It also creates local awareness. I mean, that a digital currency is something that will bring benefits to the island, and create local involvement, create local knowledge building. And of course, for our side, it's important to embrace young talent and use their new ideas on how to achieve things. So we came up with a framework to address these limitations that we have as a country. And this resulted in a white paper study that was actually published and presented yesterday at a central bank, at our central bank event back in Curacao. So this is fresh from the press, this white paper. So the objective is, of course, to address our limitations and incentivize and encourage the thought of a national digital currency, because I know, and I think as the governor also explained just now, there's a lot of misinformation about a digital currency for a country. Everybody's talking about cryptocurrency, and it's confusing. So it's very important to create awareness and create encouragement to move forward with a national digital currency. And we are not there yet. We are just starting to get actually the central bank incentivized to move forward. And I know that our central bank also hired Bitt to do a feasibility study. So they're doing that now too. So both IBIS and the team of the students see the potential of an introduction of the central bank digital currency that will not only enable innovation, but will also boost economy locally. It's a strategic enabler that will create more sustainable and modernized local payment system that will meet the current needs for our financial system. Is it my 15 minutes? Wow, okay. So let me just finalize this with this slide. So we do believe that this new reality will bring not only solve a lot of these or enable these items here, but also the spin-off effect, which we believe is much more important, to just eliminate barriers, eliminate friction, in order to be able to leapfrog into a new way of doing payments and banking. I think I'll leave it to there, because I think there are much more items we can discuss when.
We'll have some Q&A later, and
Yeah.
so some of the points could come out in some of the answers to the questions. Thank you very much, Mr. Russell.
Yeah.
Okay, we now move on to our final presenter of the day, Vanessa, who will kind of break things down for us a little bit and tell us whether there are not only threats, but some opportunities to this whole new phenomena.
Got it. All right. I really am the last speaker between you and the cocktail, so I'm really going to try to do this as fast as I can, but this topic is very important. I think today's discussion really shows how the world has evolved. We need to get on board with this. And I really want to bring back the discussion to kind of a higher level. So this is not about the security of Bitt or about the projects are on the way. This is really about the security risk of the IT systems that will be handling all of the virtual currency, cryptocurrency, or whatever it is called. Because ultimately, what is a virtual currency as opposed to cryptocurrency? It only depends on whether the government is backing it up. It's a question of trust. The current system that we have today, we have it since the 1970s. Before that, we used currency that had an intrinsic value, like gold. Then after that, we moved to fiat currency. Fiat currency have three essential functions, right? So we know that they have here. So they have three, they are a store, they carry a certain value, even though the money has no value, right? That paper that you have in your hand doesn't really have the 100 value that's written on it. It has that value because the government says it does, right? Which allows us to have loans based on these, let's say, dollars. Now, what happens when people lose the trust in the currency that is backed by government? This is what we are currently seeing in countries like Venezuela. What we have there is a local currency which has lost its value because of the inflation rate, which is about to reach, it's going to reach something like 10 million person in 2019. That is huge. People with their retirement money is now worth nothing. So they lose trust in the currency. And then they move to another currency they trust most, which is a cryptocurrency called Dash. Dash is used by 40% of the people in Venezuela. They have store in the street. You can walk into a Dash store and say, I want to open a bank account. I want to work with you guys. They will give you Dash money for free. And on the way out, they will show you how you can actually buy something with Dash money, something that is of the local economy, so from your neighbor, so you can actually encourage the local economy, and you know how it works. Now, the government is working on its own virtual currency. A lot of people are saying, is it going to work? Are we going to trust this? We have something that's working with Dash. So, of course, there's a bunch of legal issue behind this, and how Venezuela is going to react to this new reality is a different discussion. But what we see is that the value of money, the stability of the system, really relies on the notion of trust. At the same time, trust is the defining factor as to whether people will actually adopt the disruptive technology or not. So whether it is virtual currencies, cryptocurrencies, or that self-driving car, I'm not getting in that car today. Sorry, I'm not getting in it, and it's not driving me. The reason is I don't trust it yet. Now, maybe because of my profession, that doesn't help. But the fact is that it has proven that the decision as to whether people will adopt the technology or not is based on trust. And I'm beginning with trust because security is about trust. It's about people. It's not about IT system and assets. It's about, can we make people trust this new technology we're trying to bring into their life? And now talking about, now we're using the term cryptocurrency here, but virtual currencies or whichever, we have to understand we're not only bringing Bitt, or we're not only bringing a virtual currency, we're creating a brand new ecosystem with a number of new suppliers and manufacturers. Around Bitcoins, for example, you have the whole industry around token creation and distribution, underwriting services, storage, what you call the wallet services. This is new. We don't have regulations on that. What is a good wallet and what is a bad wallet? How do I know as a user if I'm choosing the right technology? I don't know. I have to make a lot of researches, and it's not readily available to me, so I don't know about my grandmother. You have a lot of other services like investment that are being created around cryptocurrencies that are akin to services we know today. So they could be regulated by existing laws, but there's no case law. So we don't know exactly. So that whole ecosystem that we're creating around these virtual currencies is not entirely regulated, is not entirely understood, and we don't necessarily know how to quantify the risk. As an example here, and the data they stopped in 2018, if we go up to 2019, you'll see there's a lot more acts that are in there. Those in purple, these are wallets. These are cryptocurrency startup. The other one are exchanges and crypto mining marketplace. That's where the security concerns are. All of these IT systems that are handling the currencies are actually more fragile than we would think. I just read that 45% of Bitcoin exchanges since in 2015, 45% of Bitcoin's exchanges had already closed down. And actually in 2015, 36 of them had closed down. Here's the number. 2, because they had no banking partners that wanted to work with them. 13 claimed to have been hacked. 4 closed led to criminal conviction. In total, 950,000 Bitcoins were stolen. And that's in 2015. So all of these numbers affect how people trust the system. People don't understand the difference between an exchange, a wallet, and a crypto or virtual currency. They just don't. They associate everything together. So in order to get people to adopt these new technologies, you have to educate them, and you have to secure the entire ecosystem. And that is hard because the attack vectors have also amplified to a number of new attack vectors that we didn't have before, some of which we still haven't found ways to address in a traditional manner. As an example, we know that ATMs are vulnerable to security threats. Well, there's also Bitcoin's ATM. They may look like a normal ATM, but they have nothing like normal ATM. They don't have the same security safeguards. There's no standards in the industry as to how you go about doing a Bitcoin ATM. Today, the city of Vancouver has announced they want to ban the ATM machine of Bitcoins because they associate this with money laundering. So what is the message for the user? Is that Bitcoins are dangerous. Not that the company that has nothing to do with Bitcoins is dangerous, that Bitcoins are dangerous. And that's a problem we have in terms of trust and getting people to adopt digital currencies. Crypto crime tactics. So there are security threats that are specific or more prone to occur with cryptocurrencies or virtual currencies. And most of this are around the end users, social engineering. So if you use Binance, which is a very popular exchange, they will ask you to create a code so that if they email you, you know it's you that is being emailed by the right person because the code is there. People don't know the difference between bad and good emails. It's very easy to send money to the wrong person and to have a phishing attack. And unfortunately, the transactions are final. It's not like you can call your bank and say, I got scammed. You can't. It's there and it's done forever. So this type of publicity, this type of advertising around the attacks are bad for the entire digital economy. They're bad for virtual currencies that don't face the same problems, but people don't understand that. They associate everything together. So there's a big job of security awareness because ultimately, the Bitcoins is not yours if you don't have the keys to it. People don't understand what is a virtual key, what is a public key, and what is a private key, and how they have to safeguard their private keys, right? So with money, having the money means having the money. With Bitcoins, you can have it in your wallet, but if you don't have the private keys, it's not your money. And that is part of certain regulations. So what we're doing with these cryptocurrencies is we're shifting the risk from the institution to end users who are already vulnerable and are very prone to errors. We've said it for 20 years in cybersecurity. Your weakest links are your employees. It's the same thing with digital currencies. As long as the users don't know how to use it right, as long as they don't understand the security risk, they will remain your weakest link. And that's very unfortunate because virtual currencies are extremely secure. They're probably one of the most secure technology we have out there. But how we use it makes a whole difference. And how we put it into other IT systems that are not secured also makes a big difference. The point I'm trying to make here is that you can create a virtual currency that's going to be extremely secure, but if you implement it in an ecosystem that is not secured, you're going to face problems. You're going to face additional risks that you have not necessarily foreseen at the project level. So how do we go about understanding the risk that comes with these new technologies and how we implement them in new ecosystem, right? So we're not going to reinvent the wheel. Basically, when you have a new technologies, a new problem, a new solution you want to bring into a new ecosystem, what you're looking at is two types of risk management activity. You need a project-based management activity that will allow the decision maker to make the right decision. So you try to identify your controls, and you try to identify if the residual risks are acceptable. Your board of directors, the CEOs, they're not there in the IT room. They need to have the right information because they're going to be held liable, right? If they do something wrong and approve a technology that is faulty. So you need to make sure that you have a good process at the project level so you're getting the right information. And then, it has been mentioned, it's absolutely true, your ERM needs to be adapted to new technologies. So ERM should reflect privacy risk, it should reflect technological risk. It's no more just a financial tool. So it's really an enterprise level understanding you're looking for. Now, one of the problems that I get a lot of people come to me, that's nice, but I don't know how do I evaluate the risk that goes with a cryptocurrency or virtual currencies. The controls that I have today are not really adapted for this. So I just want to point out that there is a standard out there that you can use. It's called CCSS. It contains about 10 security controls that helps decide whether this is a good cryptocurrency or not, if the development methods behind it are acceptable or not. And it's important to use the right controls. It's important to use people that are qualified to look at algorithm, to look at secure code development and tell you if this is the right company or not. There are more than 1,000 cryptocurrencies out there. There are many ways to do things. You need to make sure that you select one that fits your business purpose and that you use qualified people to make sure that the security levels that they have, how does that affect your ERM approach? And that's at the project level. So I think we have a very nice loop because my closure is that social innovation is our future, but there's no social innovation without security. Thank you.
All right, Vanessa, thank you very much. There are some people on my panel who seem to think that I kind of showed some kind of preferential treatment towards the one female presenter, but I didn't really. Okay, so my first question will be for the governor, and then I'll open it up to the floor for people to ask questions, and I'll ask some in between. Governor, there seems to be this thinking out there that central banks are very slow to respond to the regulating all of virtual currencies, and that there isn't that level of agility and flexibility in terms of your response. Do you think that that is a correct assumption, and how do you think that could be challenging to central banks?
Well, I think in general, the regulatory framework is behind. That's a fair comment, not just of central banks, but indeed even in the non-bank area, in other words, where the central banks do not directly supervise. And that is why I made the point earlier that, you know, in my own interaction with the central banking community, the tendency has been sort of to hold back and to sort of wait and see. And that is why I do not feel that that is an appropriate approach. I think a balanced approach is required where we lean in and we engage and help shape the industry. Ultimately, if we're going to have an effective regulatory framework, there is going to be a need for cross-border collaboration. That's absolutely critical. The establishment of standards. So cryptocurrencies, no regulation right now. If they're going to see have any chance of success, there will have to be some regulation. If not, the customer is going to be hurt. We've had occasion to put out advisories, warning people, for example, who are investing in Bitcoin or other cryptocurrencies. Do you know what you're getting into? Can you afford to lose this money? Are there dispute resolution mechanisms? In other words, if there's a problem, who do you go to? Is there a regulator? I mean, basic questions to be answered before you go in. So in some, the banks are behind, the regulatory community, but I think the fact that more than 40 central banks are now engaged in this issue, the fact that the ECCB is involved and reaching out, working with Bitt, talking to other colleagues around the region, the fact that as a central bank community, we are now looking at reducing the use of cash as a group, I think it's a good signal of our intent to respond to this particular challenge and in fact to help shape the narrative and shape the way the industry evolves. So just as we need a change in mindset, if you will, from the consumers, there has to be a change in mindset at the level of the regulator. Rather than leaning back and saying, I don't understand the model, let me not do anything, lean in and try and understand. That's what a pilot does. A pilot doesn't mean we have all the answers up front. We have clear objectives. We've put on some guardrails in terms of boundaries and arrangements, and then we must learn. And we believe that this pilot, in our case, will expedite organizational learning that will be done to the benefit of the entire regulatory community. So it's fascinating. Since we launched this pilot in March, the response has been very, very good, I must say, within the region. Very encouraging. But what is perhaps even more astounding is the response from outside the region. Every day, literally, I'm getting a request for us to show up somewhere to explain what we're doing. And of course, we can't. But the reality is that we've ignited interest. And I think together with collaborators like Bitt and others, we're going to be able to address the issues going forward. So I'll leave it at that.
Okay, the floor is open for questions. Linda?
Thank you very much. Before I ask the question, let me say that I believe I've been to most of the CEO forum or fora that the campus hosted. And this one has been absolutely the best, you know, in terms of the quality of the presentations, on both days. And I think this particular panel was quite excellent. Well done. The question I have, I think, is directed towards the governor. And forgive my ignorance. We know that there are the digital currencies and the virtual currencies. Bitcoin, we agree that there's no intrinsic value that these currencies possess. You know, they're not backed by gold. They're not supported by a regulator. Yeah. They're basically either payment mechanisms. People still question whether or not they're payment mechanisms or actually currencies. Yeah. So that question is unanswered. The initiative being undertaken by the central bank, the Eastern Caribbean Central Bank, with respect to the virtual currency, that's correct, right? Digital currency, my apologies. That is backed by the regulator stands behind that.
Correct.
All right. I'm trying to understand how is that fundamentally different from the current electronic payment mechanism that is in place right now, which also has the support of the regulator. What will be the differentiating features between the new digital currency, which the regulator backs and which is obviously backed by the reserves of the central bank, I would imagine, and the current electronic payment system right now? If I want to make a payment today, I don't go and take cash from a bank. I give you instructions, I give you a wire instructions, and you send money from one account. It's electronic money. Most of the money and most of the transactions that take place today is electronic, is not physical cash. So the question I have, and forgive my ignorance, what will be the differentiating feature between the virtual currency that we're looking at and the existing payment mechanism when money is transferred electronically?
Very quickly, too slow, too expensive. Too slow, too expensive. Whether you take checks, credit cards, debit cards, wire transfers. I won't bore you with a slide, but we've actually looked at all the current channels, right, and the cost of those services, unacceptable. And beyond the cost, there are financial frictions with actually getting them through the system, the time it takes. So that is one significant advance, or if you will, why this digital currency is superior to certain alternatives. Now, I keep making the point, you will continue to have all the electronic money that you want. So if you, Mr. Giuseppe, still wants to use the electron, you can.
Right.
The other issue is the physical cash. Remember what I started with? 80% of all our transactions are cash or checks. How do we bring that down? How do we bring that down? The trust issue that Vanessa spoke about is tied to the central bank. One of the things that the central bank has, for obvious reasons, is trust. The banknotes and coins that we issue right now, people trust them. They trust them because they know, certainly in our case, the value is stable. They know that our reserves are strong, the foreign reserves, and they know that, you know, the value today is the value tomorrow. That trust has to be leveraged to reduce physical use of cash. So what are we proposing? That you replace some of that physical with the digital one-to-one. In other words, if we were issuing, let's say, for example, $20 million in EC banknotes. We may then decide now we're going to do 15 million and put 5 million into digital cash. So it gives them that option while continuing to have the relationship with their trusted central bank. And that trust has been earned over a period, in our case, in terms of our monetary arrangement, for 43 years, because this is the 43 years since we've been pegged to the US dollar, 2.7 to 1, and we've been able to maintain that. So that's an important leverage point, while continuing to build on the trust that exists. For a currency can't work without trust. And you made that point very well, Vanessa.
Could I just get one more minute for 2 quick responses? So we say it's reduced cost, and you want to get rid of the cash, so you want to reduce the cash. In Belize recently, we introduced a new payment system. The central bank has just introduced a payment system where, I mean, all of the banks are now allowed to transact electronically, transferring funds, I mean, between each other and between the central bank as a mechanism or initiative to reduce cash. And what we have also been doing in Belize is that in order to get checks out of the system, they're actually increasing the cost of processing checks. Right. So if you want to send $1,000 or $5,000 to a particular customer, it is cheaper to call your bank or send an email to the bank and say, wire transfer $5,000 to Governor General Antoine for me at Bank X, as opposed to writing a check. Right. And by virtue of that mechanism, we are getting rid of checks out of the system. So, I mean, it's just a sort of something in my mind.
Choice. Yeah. Choice. Yeah. We are doing the same in the ECC with electronic funds transfer. We are doing that. Checks are more expensive, 75 cents now, as opposed. But you have to give choice. And that is what, and I showed the channels, the 5 channels that we hope to generate on that basis. So let them contend, let all the ideas and channels contend.
If I may just add, I think it's important also to realize how important it is to create the basis for innovation in the end consumer innovation that will be available, or that comes available once you have a digital currency in your country. You're more open, or the market will be more open for developers to develop apps and make payments without actually having to interact with a bank at that point, because it's a digital currency which is available to the market, and it's a value that is out there.
Yes, I'd like to also join with Lyndon and everybody else to congratulate this particular forum and CEO Wendy for pulling it together in a very wonderful way this year. On this message, we spent today talking about the need to be innovative, the need for banks to change, the need for us to look forward. I think it's true to say that we also have this strange situation in the Caribbean that banks are losing some of their clients to credit unions. And we have to ask ourselves, why does this happen when we're trying to be more innovative, we're trying to invest more, and, well, part of it, of course, is the personal relationship, and that comes back to the trust. And a lot has been said about the key factor of trust here. The old banker's story of their faithful customer coming in once a week to withdraw all of their savings and count it out and then put it back in, you know, just to know it's all safe, and they trust the bank that way. I'm not too sure, and maybe this is for Roddy, I'm not too sure exactly how we're planning to use the delivery channel for this, because as the governor says, cash is the predominant factor or channel at this time. And if we're going to move, and cash is inclusive, if we're going to move to the digital currency, what channel are you planning to use that can work towards making it feel as inclusive as cash? By that I mean, so is it a mobile wallet? Is it a phone? Is it which channel are we thinking is the best way for that delivery.
Okay, I think one of the key elements to introduction of central bank digital currency is that all participants in the economy buy into it. You know, one of the things that strikes me, even in the conversation earlier today when I think it's Lisa Marie Alexander was up here talking about customer centricity and how do you do it. The contrast that struck me is that banks are rarely driven by process because of the regulatory environment they're in. It's process first and it's customer centricity second, I would say. Whereas financial technology companies, it's really the customer experience first. So if we want to have the buy-in of every actor in the economy, the people who have entrusted their money to banks are going to look to banks and credit unions as the channel to encourage them to take up the usage of a central bank digital currency. I think that's absolutely key. And I think there are real synergies between fintech and banks in promoting that kind of adoption. I think without that, you're going to struggle because it's banks and fintechs together that can come up with the use cases that people want. I mean, one of the things that strikes me, a lot of this is truly about context and the amount of cash that's used in the informal economy. I cited this number. It's an Inter-American Development Bank number, $1.5 billion in the informal economy in Barbados. You want to pull those people into a central bank digital currency, and the banks would like to expand market share. Well, you have to promote the convenience and the savings to those people. That's a big job. I mean, I can tell you that just from the 2 years or so I've been with Bitt to promote that kind of stuff. So I think that is the primary channel. I'd say one other thing, because you touched on the credit unions versus the banks. I don't think it's going to be a surprise if I say the banks don't have an amazing reputation in some parts of the Caribbean because of the fees and the way the fees are presented. And I think the feeling amongst account holders is that I don't have any choice. I'm getting gouged for these fees. That's their language, not mine necessarily. But they've got to pay it if they want to maintain their account. Those who can will open an account with credit unions where they effectively own what's going on in the credit union. And I think that accounts for that piece of it. But again, the promotion of a central bank digital currency should include the credit unions alongside the banks. And I think a joint uniform effort is what's required.
I know the governor, the ECCB has been trying to incorporate the credit unions into the whole regulatory framework. How do you see that working in that regard to what Rawdon just mentioned?
Well, absolutely. The credit unions now account for at least 13% of the assets in our financial system, speaking ECCU. And you look at credit expansion, where banking sector credit declined by 11%, the credit union went up by 22% over the last 4 years. They now have 2/3 of our population as members. They're important. So what we feel is that any initiative that we're undertaking needs to be inclusive. It means that the credit unions should be involved. So I have had several credit unions indicate they are very interested in being part of the pilot. The credit bureau that we're doing, credit unions will be involved, not just the banks. Deposit insurance, we will be speaking with the credit unions. So in other words, it's financial system, because there are, in our space, now we've assessed 9 systemically important credit unions. So the idea of leaving banks, them alone, and it also means enhanced corporate governance. It means looking at the regulatory environment for credit unions. And I was having those very conversations earlier this week in St. Lucia at the OECS Credit Union Summit. So the answer is yes, very much to have them involved. They are, for many now, the financial institution of choice. And it used to be that they were for the ordinary folk. Well, the kind of numbers I'm seeing is not ordinary folk. Many people, including businesses, are finding their way. But I did say to the credit unions on Thursday that 10 years ago, we thought of the credit unions as disruptors to the banking system, or the banks. The truth is that the credit unions themselves are now being disrupted by fintech operators and opportunities, and therefore they themselves have to find common cause. So in the same way, banks and fintech have to come together to do certain things, I think the credit unions similarly have to examine those options.
Okay, my question is for Vanessa. What do you think are the risks that banks face in adopting virtual currencies into their business model?
Thank you for your question. So it does depend between if you're talking about the virtual currency that's backed by the government, or if you're talking about virtual currencies that are not backed by government. Because in some regulation, like in Japan, these cryptocurrencies are currently recognized. And at the same time, in other regulations, in other jurisdictions, they're recognized as securities, if not as money. And that distinction is very important. Are the bank handling it as investment product, in which case they kind of more have an awareness obligation towards their end users about things that we have talked before, that this is a totally speculative market. There is some value associated with cryptocurrencies that if you have a proof of work algorithm may depend, let's say, on electricity. If you have a proof of stake, it may be something else. But this is not readily accessible to people that don't have a technological background. So as investment product, we have to be extremely careful when banks are in that business because it's easy to be misleading. If you're talking about money, then again, we mentioned that the money itself may not be the issue, but all of the IT infrastructure that you may use, including your suppliers that you may take into because you're going to have to work with payment gateway, you're going to have to work with exchanges and the likes. You may associate yourself with somebody you don't want to be associated with. And it's a big supplier chain management issue. Regular processes continue to apply, even if it seems very opaque. So continue to do your risk assessment.
Okay, my next question is for Clark. With regard to the national digital currency that Curacao is experimenting with, should you not wait for when it's safer? Cybersecurity is a big issue, and you can lose every cent you have in a second. Is that a concern?
Well, security is always a concern. I think it has been addressed widely. But I think blockchain with distributed ledger technology has proven to be very secure. I mean, we're not talking about the exchanges, but we're talking about the blockchain itself. And it is in the process of being widely adopted. So I think that proves that you need to move forward. And security risk will exist, will always exist, but improvements on that and mitigating that will also continue as we move forward. So I do believe that you have to act now, and it will continue to develop and mitigate itself when moving forward. So no, I don't think you should wait. No.
Do we have any other questions on the floor? That's the thing about being between the end of the day and everybody goes to sleep at some point.
Specifically between the cocktails.
Okay, so I'll ask each moderator in like 1 minute just to do a... we have one question? Not each moderator, each presenter, sorry.
Hi, yeah. My question is around, which is what we've seen in other jurisdictions around the world, the whole question of adoption. And what is the plan for adoption in the ECCU? I mean, I've heard you talk about the benefits of it and the banks and so forth. How do you get the everyday person? Is there a plan right now that ECCB is mapping out for getting the everyday person to get a comfort level? You know, you think all thing about trust, but just putting it out there does not mean that person is just going to start to use it. So what's the plan around getting the everyday person, the everyday citizen, feeling the trust and starting to use it instead of cash?
So just to be clear, our mobile penetration rate is in excess of 100%. So almost everyone has a smartphone. We've begun that conversation, and our pilot is intended to give people a chance to actually touch and feel and engage with digital currency. So I didn't get into the specifics because of the time allocation, but basically we are 8-country currency union, as you may be aware. We are going to be piloting in 4 countries. We expect to have the numbers we are finalizing, but perhaps 4,000 in each country. We'll see, it depends on the size of the country. And for at least 6 months after this initial 12-month period of developing and testing, which of course we're partnering with Bitt to do, we will be in the countries for a period of time, at least 6 months, to be able to actually test and learn. As we speak, we're engaging financial institutions, including credit unions, which were mentioned, merchants, mobile wallet providers, around this issue of involvement in the pilot. And the pilot is going to be voluntary, but at the same time, we believe it will be an opportunity for people to get comfortable and for us to begin the adoption. But there are other things as well that we need to be doing. So 2 weeks ago, I was in Washington working with the World Bank and colleagues around the region on a digital economy moonshot for the Eastern Caribbean. Because I recognize that even as we push this pilot and we push a number of initiatives, we have to focus on a digital economy and the ecosystem around that. Exactly. The 5 pillars of the digital economy, which we have to: infrastructure, platforms, finance, entrepreneurship, skills, all have to come into play. So even as we're doing the pilot and getting people comfortable, and the central bank is playing that lead role, because that's public policy, and innovation requires that kind of leadership at the level of public policy, we also recognize that we have to build out the digital economy in terms of the enabling environment. So I think it's a combination. And by the way, there are people in our region who will have difficulty with this because, for cultural reasons. Those of us who are people of faith, there are people who will say, well, are we now inviting the mark of the beast in our economies and facilitating that? And my simple answer to that is that not ECCB or no one could stop biblical prophecy. So that will happen however that happens. What I do know is that we have to ensure we position our region for success and competitiveness and growth and resilience, and that is part of what we're trying to do. So the adoption will come. A big part of driving adoption is what the government itself does. And that's why I was particularly pleased when I heard the Prime Minister of Barbados, for example, mention the decision to get out of checks, I think, by 2021, which means bringing along the Barbados Revenue Authority, Social NIS, Social Security, and of course government. And if you get those 3, then you're gone clear. And then you can bring the others along. But you need that kind of leadership, because you need the e-government platforms. The citizenry must get more and more comfortable with the digital idea, the use of digital by being able to interface with government and get their services digitally. And I think that will help adoption, along with pilots and along with some of the education that we've begun. But that's a journey, brother, and it's not going to be a sprint. It is a marathon, but we're ready for it.
If I may, I just want to add also, I think never underestimate the power of the youth. I mean, any adoption rate that you want to be successful with in terms of mobile wallets, I mean, the youth will push that for you further along than you think. So it's very important.
Yeah. I'd add something as well. You know, I think if you can show greater convenience to the end user, they will adopt it. If you can show lower cost, they will adopt it. But it's not enough. You have to have the signal that's sent by the government, as the governor was saying, or even the central bank. That's really key. But the final piece that's we've seen in Barbados, because we are learning lessons as we go on this very question, is that you have to be able to bridge the gap between the existing financial plumbing and infrastructure and the new technology. If there's resistance there to doing that, it is going to stifle adoption. You know? That's why when I said earlier, what are the channels? That is really a key channel, that the licensed financial institutions, at least during a pilot, they test it fully to see what it could be, what adoption might be. And one final point on that count is we've also found that in our own tests with companies and ordinary people in the street, that use cases start to reveal themselves, the things that you cannot think of ahead of time that will drive adoption. And I fully expect that to happen during the pilot also. Something unexpected will occur. People will find a way to use it that you didn't predict, and that will end up driving adoption.
Vanessa, any last words?
Yep.
Hi, afternoon, sorry. Just a quick one. You're pioneering this in the region, let's say that. Do you have any feedback for us in terms of what are the perspectives of the other central banks in the region? Because we're one Caribbean region. Have you had any feedback from them?
Indeed, we have. Indeed, we have. I think probably might be the first mover, but my colleagues are very interested in this pilot to learn from us. We are very willing to share our experiences. They will leverage that, but I know perhaps Bitt can speak of its contact with additional central banks or other central banks that have begun to talk about possibilities there. So yes, they're very much aware and very supportive and looking to see how we fare and what lessons they can learn. And it's a community, so we're more than willing to share. We collaborate on cybersecurity. I didn't get into that because some of it is inside stuff, but we collaborate on a number of things, and that is just the latest, if you will, collaboration.
Yeah, I think there are 3 points, 3 broad areas I talked to. One is that the central banks in this region all face a large informal economy where cash is king and cash is expensive. So anything that potentially reduces that cash is attractive to them. Several central banks in this region, when it comes to remittances, are talking very, very big numbers. Haiti, where we went to, remittances represent 30% of GDP. Jamaica, it's something like 15%, $2.5 billion, and so on down the line. Anything that can reduce those costs, if you've been to Haiti, had the good fortune to go to Haiti, you can see where a 1% savings on that bill, because their fees on remittances run from about 6 to 9%. If you could reduce that by a single point, you're talking $35 million a year. You walk around Haiti, you can see that money could be used. And the central bank sees it, and for that reason, they're extremely, extremely interested. And I'll stop there for now.
Yeah, I'll just let Vanessa have, just a few last words, and then we end there.
Thank you. I just want to say that it's extremely exciting to be here to talk to banks from the Caribbean. It's a market I've been following for several years. It's a market that has a lot of opportunity around social innovation, and that is actually well on the way to become leaders into that new fintech environment. And if it's done right, they can actually position your region in a brand new light and an opportunity to work with technologies that are increasingly secure by design, like blockchain, that help to build trust, including with corresponding banking, but also including with end users. The thing with disruptive technology is that market where in the past would have more challenges, now have more opportunities. And that is extremely interesting. And what the opportunities that we've been talking today, the project that we've been discussing, are unparalleled elsewhere in the world. And I would like you to take the time to appreciate this and really thank the people that have been working very hard to make this happen. Thank you.
All right, I'd like to thank our panel and all of you who stayed back this afternoon. I know it's a difficult thing between the last presentation and this one and the cocktail. But I'd like you to stay around and support the cocktail, support our sponsors, and to ensure that you had a very satisfactory client experience. We will send out a survey that we would like you to take some time just to give us your feedback. Feedback is necessary, and we need to always for continuous improvement. So thank you very much, and thank you for your attention.
Thank you.